Well, good morning, everyone, and welcome to XPON's Q4 FY23 results webinar. My name's Jane Lowe. I'm Managing Director of IR Department, and I'll be your moderator for today. Joining me is Matt Foreman, who is the founder and Group Managing Director and CEO of XPON. Good morning to you, Matt.
Morning, Jane. Morning, everybody.
Morning. And also with us today is the recently appointed CFO, Lisa Young. Good morning, Lisa.
Morning, Jane. Morning, all.
Morning. So a quick intro for anyone that hasn't met Lisa prior to now. So she's an experienced CFO in the digital media sector with over 11 years experience in CFO and senior finance positions. Lisa's experience includes being CFO of ASX listed Macquarie Media Limited for 7 years. And prior to that, she also held senior positions with the Daily Mail Group and was the Director of Commercial Radio Australia Limited. So thanks for joining us, Lisa. The format for today is that Matt and Lisa will walk you through the results which were released this morning to the ASX. They're also up on the XPON website at xpon.ai. The presentation should take around 20 minutes. After that, we'll have a Q&A session, which will go for about 10 to 15 minutes. A reminder, if you'd like to ask a question, you can pop it in using the Q&A function in the ribbon at the bottom of your screen, and we'll get through as many questions as we can in the time that we have. But for now, though, I'd like to ask Matt to start with your screen share, and I'll pass the floor over to you and Lisa to get us started. Thank you.
Thank you, Jane, and good morning, everybody. So let's get into it. Before we jump into the actual results, what I want to do is maybe just spend a little bit of time going back to some of the basics around who XPON is and what we do, just to make sure everyone's got a really clear understanding of that. So XPON, we're a marketing technology company, and our mission is to modernize marketing and customer experience. And how our products and services create ROI for our customers is really in those two areas. It's either improving the targeting and measurement of marketing so it becomes more effective, or it's about helping to use data and technology to deliver more personalized and profitable customer experiences. So, the reason customers do business with us is because we help them make money and help deliver a better ROI in those two areas, marketing and customer experience. So some of the thematics, I guess, that are really driving demand for what we do is there's this technology disruption, and there's really a need for businesses to accelerate the adoption of some of these new technologies because they're being forced upon them anyway. And they're technologies like cloud and AI and machine learning. Got this whole theme around privacy that's really becoming very complicated for businesses to navigate. And as governments keep increasing regulation, you've got things like third-party cookies being phased out, and you've got things like first-party data really rising in prominence and value within an organization. And finally there, you've got consumer expectations, and businesses these days really need to be able to scale a one-on-one personalized experience with hundreds, thousands, or millions of customers all at once. So all of those things create a lot of complexity and make it difficult to find the ROI in all of that noise. And that's really what we do at XPON. We help simplify all that complexity and make sure we're maximizing the ROI through all that disruption. So how do we do that and how we help deliver that? Well, there's really 4 areas that we work with customers. We help them understand and simplify their technology mix. We help them leverage and centralize their first-party data. We help them enrich that data, that first-party data, and make it more valuable, and using technologies like machine learning and AI to do that. And then finally, we help them use that enriched data to really power and measure and optimize both their marketing and their customer experience. And what's key and critical to all of that is it needs to be done in a really secure and private way. So that's kind of how we work with customers across that complexity and really start to distill it down into value for customers. So, we have products and we have services, and our products are there really to are supported by our services to make sure that the products continue to be adopted, make sure the products are secure, and make sure the products are very effective in their value creation for customers. So in our product mix at XPON, we have our own intellectual property, our own IP, which is our Wondrous data platform, and also Holoscribe, our extended reality platform. We're also a premier partner with Google, and we work with Google in both the Google Cloud and Google Marketing Platform product areas. And then on the services side, with our project services, which is really about, consulting and helping customers, understand their readiness to adopt some of this new technology, implement this technology, train some of this technology, and just general project and transformation services around this space. And then we have our managed services, which are really there to enable and support the accelerated adoption of the products, and particularly features inside of those products, and make sure our customers are building their digital maturity, but also being able to take advantage of all the really valuable things that the products can do once they've got their data in a ready state. So our managed services are typically linked to our products, and they're sold as a subscription. So they're a recurring type of revenue, as are our product revenue, and our project services are a one-off. It's a bit of a snapshot across the sort of customers that we work with and the industries that we work in. So you can see there that the main verticals, there's 5 sort of main verticals. The 3 strongest verticals for us are those first 3: financial services, retail and travel, and media and entertainment. And we've certainly seen, particularly in the last 12 months, those 3 industries have been very strong, as those themes that I mentioned earlier around the complexity and the disruption have really impacted those industries. So we work with blue chip corporate and enterprise brands. We've got 55 recurring customers that are recurring contract customers, and 38 non-recurring customers currently across that space. There's a bit of an example, I guess, of how we would work with an example customer to help deliver marketing ROI for them. So you can see there that there's a bit of a sort of a flow chart that sort of works across. This kind of is our land and expand sales motion, as well as the digital maturity or digital evolution for a customer as we work from left to right. So we typically start with a customer, typically with a small sort of project that could be an audit or a roadmap, helping understand their technology mix and helping simplify that mix. We'd then move through and expand that customer. We'd sell them some product, and in this example, it might be some Google technology to help them with their measurement of their marketing. We'd sell them a managed service subscription to help with that. And there may be some additional sort of consulting work we might do with that on a project basis. As that customer's maturity continues to evolve, we're able to expand that customer again. We'll introduce other products, and that could be things like our Wondrous platform to help start to take advantage of all the first-party data that customers got, or it could be other technology like Google Cloud. And we can continue that motion across that sort of digital maturity of that customer, and continue to offer them value and create value, either by selling them our products or supporting those products with our services as well. And this is just a bit of an example of like a customer experience client. And I think just to help the market understand, this is, I guess, what we had traditionally been calling app modernization. So this is an example of an app modernization customer. So in this example, it's a brand called Streamly. They're basically a B2B video marketplace. So kind of think of them like a Netflix for B2B content. And what Expon does with that customer is it really helps them attract and convert more paid subscribers to increase their revenue. So really driving ROI through acquisition of customers to that platform that we've built, help them drive more personalized experiences so they've got better retention and engagement. We're using Wondrous there to power these audiences to help them cross-sell and upsell and drive revenue from their subscriber base. And then there's third-party publishers can publish their content on that platform as well, and really allow them to help monetize that technology investment with third-party marketplaces as well. So there's a whole range of sort of project services that we do with that customer. There's managed services to help with continuous improvement and ongoing platform maintenance. And then obviously there's our Wondrous technology platform there that's a license to really help create these smart audiences using machine learning and AI to drive better ROI faster for that customer. So hopefully that sort of helps put a bit of color around what app modernization is and what a typical app modernization customer looks like. So I'll hand over to Lisa, our new CFO. Welcome, Lisa, and she'll talk you through the numbers.
Thanks, Matt. As Matt mentioned, I'll take you through the FY23 and Q4 FY23 financial highlights. So in terms of the key financial metrics, we've displayed both the full year and the quarterly financial metrics. So Expon continues to deliver growth in our full year financial results, with revenue, gross profit and gross profit margin all increasing year on year. So specifically in terms of revenue, we had revenue landing at 15.1 million, which was up 13% on FY22. We had gross profit that landed at 10.4 million, which was up 22% on FY22. And we had gross profit margin that landed at 69%, which is up 4 percentage points on FY22. Moving to the quarterly results, it was a tough market through the latter half of FY23, with the key financial metrics in Q4 being impacted. Compared to Q4 FY22, so the prior corresponding period, revenue and GP were down. So revenue landed at 2.4 million, which was down 35% compared to Q4 FY22. We had gross profit that was down 36% and landed at 1.6 million compared to Q4 FY22. And gross profit margin was flat on the same quarter last year. So moving to the balance sheet, we had cash that closed at 4.4 million as at 30 June 2023. From a normalised operating cash flow perspective, we had an 800K loss, and we had 6 quarters of funding available at the end of Q4 FY23 on a normalised basis. And when we talk about a normalised basis, we're removing those one-off restructuring costs that occurred in Q4 FY23 that amounted to 600 grand. Next slide, please, Matt. We'll now have a look at the Q4 FY23 business highlights. So during the quarter, we implemented a more streamlined organisational structure to drive towards profitability and realign the cost base to the market conditions. This has an estimated annual cost saving of at least $3 million and cost us $700,000 in one-off restructuring costs. We landed 5 new customers during the quarter and expanded 7 existing customers. We maintained customer satisfaction with a net promoter score of 88. We had strong team engagement and recorded an employee satisfaction score of 90.2 for the year. I started as CFO on 15th of May, taking over from Leanne Wolski, who retired during the period. We also had the appointment of the commercial director in the UK, and he'll be commencing in August 2023, which is exciting for the team there. We've also got new machine learning models added to Wondrous, including the propensity to buy functionality. Next slide, please, Matt. Matt explained earlier in the presentation an example of a customer experience client, which app monetization is a part. So I'll now give you a few more details on that app monetization revenue. So app monetization projects help our customers migrate from legacy applications onto cloud-based scalable platforms, which allow them to leverage AI and machine learning capabilities of today's marketing technology. In FY23, app monetization accounted for $5 million in revenue as per the financial statements. And when included in Xpon's calculation of annualized recurring revenue, it equated to approximately $9 million of future annualized recurring revenue. So really key to have that distinction between $5 million in the financial statements and $9 million from an ARR perspective, which is a future forward metric. From Q4 FY23, app monetization no longer meets Xpon's recurring revenue criteria and is no longer included in the calculation of the ARR metric. App monetization will continue to be a driver of our customer experience offering, as Matt alluded to. It is expected to generate ongoing non-recurring revenue and remain a meaningful contributor to the achievement of our FY24 cash flow break-even target. Next slide, please, Matt. So let's take a look now at our revenue mix in light of the adjusted revenue classification with respect to AdMod that we just spoke of. This slide shows the pro forma impact of the reclassification of non-recurring AdMod revenue for FY23. So on the left, we've got a revenue by type chart, and it shows the pro forma impact of the change from AdMod being classified from managed services to project services. And you'll see there's a 33% move from managed services to project services in those 2 stacked bar charts. In terms of the pie charts on the right, they show the pro forma impact on recurring versus non-recurring revenue for FY23. So it reflects how the composition of revenue changes on a pro forma basis as a result of AdMod being reclassified. So once again, you can see that 33% change between the 2 pie charts. Next slide. We'll now move on to our Q4 FY23 business metrics. So we revisit these metrics noting that Xpawn is a hybrid business with software and services rather than a pure SaaS model business. So business metrics will now be calculated in reference solely to recurring revenue customers, with the exception of those metrics on the right being CAC, CAC payback, and revenue per FTE. So firstly, let's look at the Q4 FY23 metrics that are calculated solely on recurring revenue customers. Firstly, we've got average monthly revenue per customer that landed at 14.8 thousand, which was a 9% drop on Q4 FY22. This was due to reduced usage fees and the normal fluctuation in the realisation of revenue. So ARPU can be impacted by elements such as new customers who often start at a lower revenue value than existing customers. We also had LTV, lifetime value per customer, that landed at 1.7 million, which was down 3% on Q4 FY22. And again, similar theme to ARPU. We also had average monthly customer retention rate, which was flat on the previous quarter. And we also had annualized recurring revenue, or ARR, as we've spoken about before, that landed at 9.4 million, which was a decline of 41%. So that was the one that's been impacted by the app monetization recategorization. Turning to the metrics that are calculated using all customers or revenue. Firstly, we have customer acquisition costs that closed at 95,000, which was up 109% on Q4 FY22. And that was due to reduced customer numbers and historical increased spend on sales and marketing. We had CAC payback that landed at 8 months, which was up 100% on Q4 FY22, but is within our target range of 12 months. And finally, we have revenue per FTE, which landed at 179,000, up 62% on Q4 FY22, and that's in line with industry benchmarks. And then I'll pass on to Matt, who will discuss the Xpawn growth pillars.
Thank you, Lisa. It's great. All right, so these are our 5 growth pillars. I think, as Lisa's mentioned throughout our presentation, there's a very strong focus for the business to be very prudent with our cost control and cost management. Cash flow break even for this financial year is super important to us, and driving towards profitability as a result of that as well. So having said all of that, we are still focused on growing the business, and the way we're growing the business hasn't changed. So these 5 growth pillars around strengthening our existing solutions, expanding our value creation and expanding adoption of products from existing customers, really leveraging our sales and marketing capacity and some of the really smart things the teams are building there around automation of sales and marketing to drive customer acquisition and customer growth, expanding that channel relationship and our relationship with Google, particularly in the UK, is really starting to pay some dividends. In the last quarter, it hasn't quite hit the P&L yet. It's still pipeline-based stuff, but very pleasing to see we've been able to extend that really strong relationship we've got here in Australia and New Zealand, and starting to get some real strong momentum in the UK with the Google distribution there now, which is great. And then continuing to extend that Wondrous platform ecosystem, so it's easier for our customers to take advantage of all the really smart technology and enriched data that Wondrous provides. And then finally, sort of looking forward for this year, we believe we're on target to achieve that cash flow break even in FY24. We closed with 4.4 million cash in the bank at the end of June, and that mix of recurring and non-recurring project services will drive that outcome. So we're confident that the revenue's there and the pipeline's there to ensure that we can actually deliver against that. Very focused on cost management to maintain alignment with the market conditions and continue to drive towards profitability. Key focus on customer acquisition in key segments to ensure we're acquiring the right type of customers with the right margin profile. We'll continue to invest in our product development, and particularly around the AI and machine learning pieces of Wondrous, and make sure that they're delivering the value that customers need with all the developments that are happening in that space. Our NPS, as Lisa mentioned, was 88 for this quarter. It's again a world-class NPS number. So really focusing on ensuring that we keep our customers happy, we can retain those customers and then leverage those customers for growth at the same time. Our corporate culture and high employee satisfaction is really important to us, considering what we've been through with the restructure recently. For us to come out of the last quarter with a 90% employee satisfaction was really, really pleasing, and speaks volumes, I guess, to the commitment of the team and the belief of the team that they have in XPON. And then finally, they really continue to drive those Google channel partnerships to continue to grow into new segments and new markets. So that is it for me. So I'll invite Jane back. You want to do some Q&A, Jane?
Excellent. Thanks, Matt. Thank you, Lisa. And as Matt suggested, I'll now open the floor for Q&A from those attending with us today. We've had quite a few through already. So if we can start with what is the license revenue and usage fee split between Google products, Wondrous and Holoscribe?
We haven't segmented that at this stage, so unfortunately I can't give you an answer.
Yep. Okay, thank you. Question here around CAC. So would you please provide some further detail and explanation around the rise in the CAC and the CAC payback period?
Yeah, I'll take that one. So as I think I mentioned, we've had an increase in CAC of 109% versus the previous corresponding quarter. So that was due to reduced customer numbers and a historical increased spend on sales and marketing. In terms of CAC payback, that's moved from 4 to 8 months. And again, that's still within our target range of 12 months, but it's in line with the increase in CAC.
Thanks, Lisa. Perhaps another one for you as well. What's the methodology used to forecast the 9 mil of future app modernisation revenue? Do you still think this is achievable? I think you may need a correction on that one.
So app modernisation revenue, I'm not sure exactly what the question, the 9 million it's referring to, but we talked about annual recurring revenue, which is 9.4, which no longer includes app modernisation revenue. And I think we also had talked about in the previous announcement about $9 million in app modernisation revenue as at 31 March 2023. So there's a few 9 millions in the scheme of the metrics, which makes for some confusion, but essentially app modernisation is no longer included in annual realised revenue, recurring revenue, ARR, and won't be moving forward.
Thank you. Okay. Quickly here, just on app mod again. So how quickly can you scale up app mod resources if and when demand returns?
Again, happy to take that one. So in terms of, we've got really strong relationships, particularly in Vietnam, in terms of on-demand workforce that we can mobilise when and if or when AppMod returns to the same level. So that's a great ability for us to scale quickly as and when we need to, and also have that flexibility around costs in terms of a variable cost base as opposed to a fixed cost base.
Thanks, Lisa. Okay. On the restructuring, do you expect any further restructuring costs in FY24?
So the restructuring costs that we mentioned, the 0.7 million, they've already been incurred in Q4 FY23. I think it's good to note that there's an ongoing priority within the business about cost control and cost rigor. So we're going to continue to focus on that as time progresses.
Okay, thank you. Perhaps one here for you, Matt. When did you last you mentioned an employee satisfaction survey. When did you last run that? Was it before or after the restructuring announcement? And how's morale at the moment?
Yeah. So that result that we spoke of, just the 90 employee satisfaction, that was run just last week, or concluded in early July, so after the restructure. So, really pleased that, the team that are there are still really bought into the business and to the vision. Obviously, it's a pretty tough time going through that, whether you're going or staying in a business. It's tough for everybody. And, I'm really grateful for the way the team's really responded and stepped up to, the challenge, I guess, as we've had to navigate some, really difficult times inside the business, and said goodbye to some great friends and great people. So yeah, I think it's a great asset for us to keep building on moving forward. And, you know, the focus now as we've turned the page on FY23 and now we're looking forward on FY24 of how we rebuild that momentum that we started FY23 with. We rebuild it for FY24 and we make the comeback bigger than the setback.
Thank you. Okay, a related question here just around customer response. So how have customers responded to the restructuring announcement? Are there any concerns there?
Yeah, look, none that we're aware of. It certainly hasn't been a hot topic of conversation. Obviously, customers have an interest, but they haven't really been impacted. And again, a net promoter score of 88, that was done last week of June, first week of July. So it's post the restructure, and world-class net promoter score. So the customers are happy, they're continuing to get value. So, you know, I think that's in pretty good shape.
Thank you. Maybe a few more here for you, Lisa. So could you please elaborate on the discrepancy between cash receipts and revenue for the quarter?
Yeah, I think I don't know if it's referencing the one-off restructuring costs or because we do use in the presentation we talk about 600k in one-off restructuring costs, and that's on a cash basis, and then we also talk about 700k in P&L impact of those one-off restructuring costs. So that's a slight nuance in the numbers. So I'm not sure if that's what the question's referring to, but
okay, thank you. Okay, thank you. I've got some more clarity here. So the question was around cash receipts, not cost versus revenue.
So in terms of the numbers, we obviously leverage as much as possible in terms of collections. So we always, you know, go hard, particularly at the end of the quarter in terms of collections of money. And we, in the context of the cash flow break even target, we think the $4.4 million of cash that we have landed at is going to be adequate to fulfill that objective. And on a normalized basis, we also have that 6 quarters of funding available. So again, we think that's adequate moving forward.
Thank you. Okay. Question here around revenue. I know we sort of don't provide forecasts, so Matt, we'll get you to look at this one. So should Q4 revenue be used as a run rate heading into FY24?
I think Q4 obviously was soft, and yeah, there's some reasons for that as well. You know, the business was very focused on the restructure that we've been to, and that did have an impact on the numbers. I think we're also seeing a bit of a tailing off of some of those app mod contracts that weren't renewed that we advised the market of previously, which are still in discussion and hopefully will be renewed soon. But we will see that softer revenue impact flow through into Q1 this quarter. And as it dips, and then we'll start to see it rise, hopefully from Q2 throughout the rest of the year. So I think Q4 and Q1 are really the challenging times from a revenue perspective for us as we sort of go through and rebuild the momentum.
Thank you. Question here around gross margin. So decline in Q4 to 66% from 72% in Q3. Is this a seasonal or structural decline? And what is your target GP margin over time now that you're focusing on high margin customers?
So I'll take that one. So there was some slight impacts to margin during the quarter as we restructured, and we restructured the team and the client projects. So our target range remains between 70 and 80%. So and we've previously advised that to the market. So that's the objective and the priority for the business.
Thank you. Okay. What's the like-for-like ARR growth in the business? So
we're not doing a cast back on ARR. So we can't sort of disclose what the like-for-like basis is. Obviously at March we gave some in June we gave some information about the March numbers, but moving forward we won't be providing a like-for-like basis on ARR. We've changed the criteria on what revenue is included in ARR moving forward, and we won't be doing a look back any further.
Lisa, okay. Question perhaps for Matt. Do you currently have any app mod projects on the go, and how is that app mod pipeline looking?
Yeah, no, we do. We have a number of projects on the go. It hasn't gone to zero, that's for sure. Yeah, look, the pipeline's there. Like, as we've said, we think there's sufficient pipeline to help support us to deliver that cash flow break even for this year. And there's still a number of contracts that we'd advised the market about previously, which weren't renewed, which are still active conversations with customers about renewing them and things like that. So yeah, it's still a meaningful contributor to our revenue mix, and will be for the foreseeable future.
Thank you. Okay. What sort of revenue mix should we expect in future from recurring and non-recurring revenue?
I can answer that one. So our strategy is focused on growing recurring revenue. Obviously, there's a non-recurring element that's going to be an ongoing contributor and a meaningful contributor, but our focus continues to be on recurring revenue.
Thank you. Okay. Conscious we're getting pretty close to time, so just a reminder, we can probably take one or two final questions. Go on here. If you do want to ask a question, drop it into Q&A. So otherwise, this might be the last one. So are changes to the categorization of revenues and the business metrics as a result of new eyes on the business, for example, with the appointment of Lisa Young? Lisa, I don't know if you want to speak to that one.
Yeah, sure. I think fresh eyes are always valuable. So me coming into the business, I think we appreciate that Xplor's a hybrid business, so it's both software and service rather than a pure SaaS model. So we're trying to align the metrics with that non-recurring and recurring elements of the business. So yeah, fresh set of eyes are always a positive thing.
Excellent. Okay. Well, look, I think we've actually made it through quite a lot of ground. With that, I might actually pass back to Matt for any final concluding comments.
No, thank you, Shane, and thank you, everybody. And yeah, obviously, we've turned the page on last year, and we're very focused on rebuilding the momentum. Obviously, a disappointing last quarter. No one's more disappointed than I am, believe me. But no one's more motivated than I am and the executive team are to actually rebuild this business. So it's very meaningful for us and very important. So we're not starting with a ground base of zero. We've got a really strong base to build from. We've still got amazing customers. We've still got an amazing team. We've got a great product. It's just a bit of a setback. And like I said before, the comeback will be bigger than the setback. So that's our focus for this year. And yeah, we thank all investors for your patience and support as we've worked through this.
Excellent. Okay. Well, with that, I will add my thanks to everyone also for joining today, to you, Matt and Lisa, for your presentations. We look forward to keeping everyone across Xplor's progress. And with that, we'll invite you to disconnect. Have a good day. Thank you.